Welcome back. Let's take a look at the Asian markets. Interesting moves out there. They're coming off highs. In fact, the Nikkei, which was at 1 point higher by about 1.5%, has now nearly halved their gain, sitting with a gain of just about 0.75%. That means a cut of about 0.75% from the top today. Remember, this comes on the back of a 5% decline that we saw on that index yesterday. The Shanghai index, though, up by about 0.1%. We're seeing extended cuts on the Korean index, too. The Straits down by about 1.1%. Remember, when we first looked at the Taiwanese index, when it opened, it was higher by about 0.75%, but now higher by just about 0.5%. More importantly, the SGX Nifty, it's indicating an outperformance, 20 points in the on the up, perhaps on account of lower crude. So let's see where we go from there. In fact, on that note, there's some opinion coming in on what is triggering this sell-off and what are the triggers going forward for the world markets.
We did not need Mnuchin and to be confused by the commentary that he was talking about. We didn't need a government shutdown. This just adds to the negativity that we already have out there and the concerns we already have out there, mainly on trade, in my opinion, mainly on the Fed and on international growth slowing. You add it all up, you have a holiday-shortened day and week, and most PMs do not want to take any kind of risk.
If you look at the number of own goal kicks this administration is engaged in, with everything from the government shutdown, trade protectionism, badgering the Federal Reserve, we've got Mattis leaving. I've thought the fiscal policy has been extremely irresponsible. It's just cascading. That can kind of be okay for you if the underlying economic trend is really strong and corporate profitability is boosting the markets as it's been. The minute those pillars start to fall away, you really start to worry about the competency of this team. And I just think that this is not the group that you want at the helm if we're going to head through some rough times. You don't call the 6 CEOs of the top banks unless you have something real to be concerned about, because it's going to leak out.
I think between now and year end, there isn't much left here. We're probably going to continue to see this downward pressure. There is a lot of year end selling going on. People have accumulated lots of profits in this bull market, and I think with the sell-off that we've had, they'd like to keep as much as they can. Those who have losses are also going to probably be selling for tax purposes. The economy, I think, is going to continue to grow next year. Clearly, we've taken a lot of the riskiness out of assets. I don't think that the sell-off is going to cause a recession next year.
Okay, so very volatile sessions in US. In fact, the CBOE VIX has reached a level of 36 now. But even for our own markets, we have seen a cut of around 300 points in the Nifty recently. The big question is whether we will have any support today in terms of the downtick that we see. So, Mangalam, what is the picture looking like in the derivative space? Do you expect any support at the lower level?
Support at the lower levels, more than derivatives at the technical levels, it is the 50-day moving average. That is where one expects support. Why do I say that? Because one, while the FI sold about 577 crores in the cash markets on Monday's trading session, the cross volumes were extremely low, and that is a trend which I expect may continue in today's trading session as well as tomorrow's trading session as well. But on the downside, a large part of the street was anticipating it and perhaps preparing for it as well, as was the action that we saw on Monday's trading session, rather 1,700 crore worth purchase by the FIs in index options, where 23,000 long puts were added. In fact, from the start of this series as well, the FIs are long 2 puts per long call. So a fair amount of protection is built in as far as the downside is concerned. Add to that, if you take a look at Friday's trading session, usually Monday's trading session rather, what you usually see is that as we go into the expiry, the premium goes down because the time value of the money erodes. But in the previous trading session, we saw the Nifty futures premium rise by just about 5 points. That is important. Add to that, again, the put call ratio, a data point that we talk about, when it was around that 1.6, 1.7 mark, we expected it to be a little overbought. And from there, it has seen a collapse to the tune of 1.26 itself. So maybe that is indicating a support at the lower levels as well. But the higher levels, there are hurdles out there. 10,750 calls saw writing, 10,700 calls saw writing, and the 10,800 put writers covered their position. So what are the levels we'll be watching out for? 200-day moving average, which also coincides with the 20-day moving average, would be a resistance at 10,768, and 50-day moving average, which is 10,580, would see some support. The only stock I'll be watching out for, Jet Airways, expiry week, comes out of F&O ban with crude declining.
Okay, so that was the picture, how it looks from the derivative space. So perhaps some support coming in at the 50-day moving average for the Nifty at 10,579. Mangla mentioned that Jet Airways is one stock that he'll keep an eye out on. But now let's go across to Sonal Bhutra, who will tell us what other stocks should we keep on our radar today. Sonal, good morning.
Hi, good morning, Anisha. Well, I have a long list and I'll start with Nagarjuna Fertilizers because the company has informed the exchanges that they have restarted production of urea from their Unit 1 in Kakinada plant, that is in Andhra Pradesh, starting on 23rd of December of 2018. So positive news coming in there. JK Cement has informed the exchanges that they will be launching a QIP and the price will be at around 732 rupees per share. Remember, we had broken the story and it has now been confirmed by JK Cement. National Fertilizers also has signed a rupee loan agreement with State Bank of India for an amount of around 1,044 crore rupees. Additionally, they have also achieved financial closure of one of their capital expenditure projects, that is energy reduction schemes. So they have closed it now. Some stocks will be in focus because of brokerage notes on them. Like Antique has written on Siemens, they say that it has delivered the highest sales growth amongst its peers during the upcycle, and they think that the company is amongst the best stocks during the uptick in the capital expenditure cycle. They maintain their buy call on the stock. Other stock that will be in focus is Lupin. It signed a deal on Monday, and Phillip Capital has written, they say that this deal is futuristic and right now there is no impact on the financials. However, they think that Malt 1 could be a competitive molecule and that is something that the company could bet on. However, they expect that Q3 will be a weak quarter and they expect 22% decline in the earnings, and they maintain a sell call with a target price of 670 rupees per share on the stock. Back to you.
Right, Sonal, thanks a lot for that. With that, we've completely run out of time on this edition of Power Breakfast. Stay tuned to CNBC TV 18. Thanks for watching. Bazaar Morning Call comes up next.